All right. First things first, don't forget, BANC is still doing the Labor Day sale where you can get 50% off 1 month or 10% off the annual plan. And if you're already an existing BANC member that's committed to sticking with BANC, do not forget to take advantage of this annual discount before it expires. You can claim either discount by using the coupon codes you can currently see on the screen or in the description below. All right. So today's SPY was down 0.67%, and my expectation was that after the short squeeze, we were going to be due for this pullback. And now that we're getting the pullback and now that we're testing critical support, I think it's very likely the bulls are going to show up here, and there's a very good chance we can start to push to higher prices yet again. Remember, the market loves to move to hurt the majority, and after all of those shorts were squeezed out of their positions, it is salt in the wound to immediately see a pullback. And now that we're getting a pullback, this is a great opportunity for the bulls to get lower risk entries near critical support. So I do believe there's a very good chance this could be a buy the dip situation from critical support, knowing that if you're wrong, we have a very small loss to take on a breakdown below critical support. So what I think you should be paying attention to is the fact that we have two unfilled gaps to the upside. Those gaps are above 449 and above 455. And the critical support level we're paying attention to is between 442 and 444. And as you can see, 444 was that 20 daily moving average, which price did bounce off of intraday. So if I draw out a projection, I think there's a chance we could fully test that support right around the 50 EMA. And that is very strong support. So I don't necessarily think we need to go back down to that level. But for the sake of being thorough, there is a chance we could go back down to that level, confirm we still have buyers at that level, and then I think we're off to the races towards that gap fill at 455, which means we would obviously fill the gap at 449 as well. This is the scenario that I prefer because this is the scenario that aligns with the bullish trend. And as you can tell, all of the moving averages are still aligned to the bullish direction. And the confirmation of the price action that we were going down to critical support was the gap down open below the support at 448. And I told you as soon as we break 448, that tells us the bulls are waiting to buy at critical support, which was about $4 lower. So price action is doing all of the talking, and this was a very easy day to take short trades, and that is exactly what we did in the Discord server, and we absolutely crushed the market today. All you need is discipline and patience when you're trading price action because the price action does all the talking. All you need to do is place the trades in the correct direction and take advantage of the price action movements. So from here, I think the next low risk entry is the long positions from critical support. So if you have not yet started buying, you're going to need to consider doing so at this critical support level, because if it breaks, you take a very small loss, and then you know we're going for the next leg lower at 436 and then 430. So in the event critical support breaks, we would simply be looking for the bearish scenario and we would adjust accordingly. But right now, the odds favor the bullish scenario because we are still in a bull trend and 2023 is still a bull market. So critical support is right here where we hit intraday. There is the chance we double test it, so do look for the possibility of further pullback. But as soon as we start breaking back over 448, I think we're well on our way towards 455 and then 460. And we're bailing on the bullish possibilities if we break down below this critical support zone. It does not get any simpler than this. This is a very simple trade plan, and this is a trade plan that allows you to plan for either direction, letting the price action do all the talking. On the NASDAQ 100 triple Qs, we were down 0.88% today, and the triple Qs also had the pullback we were looking for, which was a retest of this breakout to prove this breakout is now a support level. I don't know what else you could possibly have asked for, but a wick below that support to tell us that we were getting a stop raid below support and then closing right on top of it, which means there's a very good chance the triple Qs can start bouncing immediately and come up here towards the next price targets in the 380s. Now, I still think there is the possibility intraday, just like SPY, that we could come down towards this next support leg lower, which is right around 371 to 370. But from there, that's where the buyers would likely show up. And then I think from there, we'll push into the 380s with the price targets at 383 and 387. So in the event we go a little bit lower, you need to look for buying opportunities right around 370. And if we fail that support, then we're looking for more bearish probabilities. But this is still a bull trend, which is evident by all of the moving averages and the price action still above critical support. So there's no reason to believe that this market is about to roll over and die until price action proves otherwise. On the Dow Jones, we were down 0.57% today, and the Dow Jones gap down, and we did create a gap up there right around 347, and we did break the support at 346, which means we should be coming down towards the next critical support, which is the weekly support at 342. If we continue to break through that, then we're likely going down towards the gap fill below 340. So as you can tell, the Dow Jones is relatively the weakest because we do have the bearish trending in the moving averages and the price action below all of the moving averages. So if the Dow breaks down and we start breaking down below the low 340s, then we're going to have a lower high, lower low, which means we could go even lower down towards 336. So the Dow Jones is very simple. You can stay bearish in the Dow while it's below 347. And as long as it's below 347, it's possible it's trying to get down towards that gap fill below 340. However, in the short term, we also have this gap to fill up here right around 347. So if you're bearish, you could be looking for a small bounce, and then it's possible for a rejection from that gap fill down to fill the next gap below 340. Now you could be sitting there asking yourself, how could you think the Dow Jones is going lower when you just said SPY and the triple Qs are going higher? And if you just look at the performance of the Dow Jones year to date, it's up about maybe 4% year to date, and the triple Qs are up about 40%. So don't ask me how it's possible. It's been happening all year long. So it's completely possible for that trend to continue. And yes, it's possible for the Dow Jones to go lower while the triple Qs go higher, because that's what it's been doing all year long, and it's over 9 months of trading. So I'm not saying this has to happen. It is possible we go right back on the bull and this turns into a higher low. And right now, for the sake of being uniform across the indices, we will assume the Dow Jones is trying to put in a higher low and push higher. However, based on trading price action, you should wait for confirmation on a break above 347. On a break above 347, the bullish scenario looks a lot more likely, and then we'll simply need to break that high around 350. On the Russell 2000 IWM ETF, we were down 0.37% today, and just like the Dow Jones, the Russell 2000 is relatively weak with the price action below all of the moving averages and now below that critical support at 188. Below 188, the next critical support is 183, and if we were to break 183, we have a straight shot down to fill the gap at 176. However, just like the Dow, I think it's possible we put a higher low and then we continue to push higher, and that higher low would likely be right around 185, and then we need to start pushing higher and take out this high above 190. This is the bullish scenario, and the bearish scenario is going to be confirmed on the break below 183. On the ARKK ETF, we were up 0.36% today, and price action continues to close above all the moving averages with the critical support zone right here at 43. Above 43, we're likely pushing higher, but the resistance breakout we need to see is a close above 44.5. So if you're bullish in ARKK, set your risk right there at support at 43, and if we break resistance, we're likely well on our way towards that gap fill below 49. If at any point we lose critical support, we're likely coming down towards 40, and below 40, we confirm the lower high, lower low that takes us down to fill the gap below 36. So as you can clearly see, there is a very bullish and a very bearish outcome, and you need to manage your risk at these levels because the price action is going to do all of the talking and tell us which gap we're going to next. On the VIX, we were up 3.14% today, and again, the VIX is giving us a more bullish probability because the VIX tried to break out above 15 and failed. I told you if we were just getting a pullback in a bullish scenario, the VIX would not close above 15, and as you can see, the VIX tried to break out above 15 and failed. So everything is favoring the bullish scenario. Obviously, that's subject to change, but we can only trade with what we currently see today, and right now we see a major rejection on an attempt for the VIX to break out. Continue to follow the VIX because if it does break and close above 15, then you can start favoring more bearish outcomes. On Bitcoin, we're currently still trading right above 25,000 and we still have the full bear trend. So if at any point we lose the support at 25,000, it should be a straight line flush to the next support at 22,000. You can't assume it's going to break, so wait for price action to confirm it, and we're not getting bullish until we can close above 28,000. On Tesla stock, we were down 1.78% today, and Tesla did a full round trip from resistance back down to support, and that support was at critical level at 245. And again, that is exactly where the buyers showed up and the price action closed above all of the moving averages yet again. This is what's known as a bullish hammer, and we just need confirmation with the break above that resistance just above 256, and then we should be well on our way to the next price targets higher right around 267 to 274. So Tesla is very close to confirming the bull breakout. We just need one more break of this resistance, and then we have the higher low into the higher high, and the bulls are going to start running. If we break support at 245, that's obviously more bearish, and then we could come all the way back down towards 230. Below 230, we get the bear breakdown and close the gap below 218, but right right now we're staying bullish while we're above 245, and we are still above 245. On Apple stock, we were down 3.58% today, and I said that Apple had a very good chance to retest the breakout at 185, and not only did we retest the breakout at 185, but we sliced right through it and came all the way back down to critical support at 182. If Apple is going to stay bullish, it needs to hold support at 182. So if it breaks below 182, then you can get a lot more bearish, and that means we're likely coming down towards that gap fill at 167, albeit probably not just going to be in a straight line. So below 182, we're looking for more bearish outcomes, and do not forget we still have the gap to fill above 190. So if we bounce from this support, it could be a very impulsive bounce that takes us straight to that gap fill because the Bollinger Bands are going to allow for it. So jumping back over to the S&P 500, this is the critical support zone, and we are still in the bull trends on the daily and weekly charts. So the odds favor the bulls and the buyers. However, we are unbiased traders, and if we break critical support, we're going to have to abandon the bullish scenario and jump on the bearish scenarios. Do not be sold on which direction the market has to go, because as traders, we could not care less which direction the market goes. We simply want to be on the correct direction of the trade. Once you get in the habit of not caring where the market moves, just ensuring you're on the right side of the trade, you're instantly going to be a lot better trader and a lot more profitable because you're not going to have a bias and you're not going to be sold on an idea of where the market has to go. This is when the noise gets the loudest during pullbacks, and I've continued to prove all year long that if you follow the chart and block out the noise, you will more often than not be on the correct side of the trade. Do not fall for the noise and the traps and all of the fear-mongering crap. Follow the chart, and we can instantly get bearish if we lose support, but no sooner. Now that we've had the pullback, we are looking for opportunities to buy the dip. Don't forget to take advantage of the BANC Labor Day deal. You can see the coupon codes in the description below. And if you're an existing BANC member, this is the best opportunity to take advantage of the annual plan. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.